Hello everybody, welcome to the March 7th Friday price action review. So getting started, we are looking at the S&P, the Nasdaq, and the Dow on the 4-hour time frame. And price is still moving in more so a downward consolidation. So there's still not too much information being provided. Non-farm payroll delivered pretty lackluster. And the Nasdaq and the S&P, like I said, they're more so in a downward consolidation, while the Dow is remaining in its consolidation. So due to this, it's best just to wait for Monday's price action to play out to see if anything will want to tip its hand. So our next stream will be held on Monday at 7 p.m. instead of Sunday, just due to the fact that narrative is still difficult to gauge. This is still considered low probability price action, and we just need to wait for the markets to get a little bit clearer for higher probability conditions. And that's the reality of trading, because we monitor price 4 days a week, and I give you my insight 4 days a week. And not every single week there's going to be something to do, and not every single day is there going to be something to do. And this is just one of those weeks where it's difficult to gauge and difficult to navigate, and the only thing you really have is capital preservation and patience, because doing nothing is still doing something. So if this week was difficult, if this week was tough, as long as you preserve capital, you still won, because weeks like this will happen again in the future. And if you made a mistake this week or you did something wrong this week, as long as you came to the understanding why it's so important to protect your capital as well as your mental capital in times like this, then that is all that matters. But even though narrative was difficult to gauge, there still was an opportunity that had formed. And another thing to add on to that, even though you don't have narrative, you still can find things to do. Now, does narrative add probability to a direction and help you filter out a lot of things? Absolutely. But if you don't have narrative, you still can find high probability setups. So in this example, we are looking at the 15-minute time frame. We went down from the 4-hour to the 15-minute chart. We're looking at all of today's price action. We ran lower and then rebalanced in the PM session after Powell had spoken. So today was more so just a consolidative day on the higher time frame. But if we look a little bit closer as to what caused the initial downside movement after non-farm payroll, we can see that there was this TPD right here. So this opening price is higher than this closing price, while this opening price on the Nasdaq is higher than this closing price, making it a valid TPD on the 15-minute time frame. Now, even though there was absolutely no SMT governing this, there was no narrative governing this, if we drop down from a 15-minute chart to a 5-minute chart, and we look through the lens of a 5-minute chart, we can see that within that TPD, towards the end lifespan of candle number 2, we can see that change in the state of delivery right there, creating a reversion level on both the S&P and the Nasdaq. Price opens up on that next 15-minute candle, which would be this opening price right here, trades back inside of that reversion level, which would be this wick, and then breaks down lower. Now, even though there was no SMT present or no narrative present, whenever you have a clear, clean cut reversion level inside of a TPD, that tells you when TPDs are high probability, and you still can find things to do. Just don't expect it to last forever. So don't expect to hold on to it forever. Take what's being provided and then get out. But if you would have missed this move right here, if you would have missed the reversion level, if we look a little bit closer, we can see that beforehand there was a short-term consolidation on both the Nasdaq and the S&P. And if we look at this short-term consolidation and drag that across, if you envision that, we can see price breaks below that original consolidation, trades back into it, and then continues lower once again on both assets. And that is what will be taught this weekend. So there's something for you to look into beforehand if you wish to. And now we're looking at the S&P and the Euro. And as we expected, we wanted to see, after the release of non-farm payroll, we wanted to see the S&P, play catch up and trade higher, while the Euro more so stayed consolidative. And that is pretty much what we got. So I would like to think this is the beginning of the rebalancing. Now, that doesn't mean immediately we're bullish right now, because we very well could form a monthly cycle sequential SMT under this low beforehand, or some sort of Kraken correlation around this area to give insight for higher prices. But once again, I'm definitely not all the way bearish down here. So hopefully you guys found this one insightful. I will speak with you all again Monday night. Good luck and good trading.